Hey traders, welcome to Charts and Coffee. Hope everyone is doing well. All right, happy Friday, gang. Gang's all here? Excellent. Hey there, Ann. Top of the morning to you as well. Good morning, 007. Thank you, Lorna. Thank you, Mirza. All right, so everyone's here. Good morning, Bill. Okay, hey there, Debbie. All right, so good to see everyone. If you have any questions, of course, feel free to type them in. Phone lines are open for your requests. We'll take them first come, first serve. Quick look at the economic calendar before we get started. What do we have on tap for today? Pretty quiet morning up until 10 a.m. Eastern. We're the first hot zone of the morning, and really the only major hot zone, although we do have two FOMC chuckleheads speaking today. Preliminary University of Michigan consumer sentiment, and we move into Waller at 12:30 and Harker at 4 p.m. Eastern. Mainly, all the FOMC chatter has been, for us as traders and investors, important to understand, where are we in terms of target rate probabilities. Quarter point hike in March, absolutely. Quarter point hike in May, absolutely. And even potentially, and this is becoming more and more a reality in terms of the probable outcome, a quarter point hike in June. Now, the more that we think this is possible, the more it's going to make its way into the dollar, strengthening it, into bond futures, weakening them, even into the equity markets, who aren't going to rally on a quarter point higher or even 2 quarter point higher hikes in terms of that ultimate terminal rate, that highest target rate. However, it's not a market meltdown type of situation. It's just that central bank is a little bit more, quarter point more hawkish than previous Fed fund futures discounting suggested they would be. And it's going to be pretty slow, March, May, June. But remember, where we end, that's only part of the story in terms of hikes. Where do we begin to see cuts? Probably not in November, although no real way to know this far out in advance. But the way in which Fed fund futures are saying, well, we think this is the way the story could unfold. December, gang. So yeah, we might go March, May, June, hike, quarter point. Then come December, so we're likely to see our first quarter point cut. Now, whether that's November or December or early 2024, it's a little less important when it's going to happen. And right now, so far in advance, it's more important that we think it is going to happen, that we're going to hold through July, September, November, and then either December or early next year, we start to see a monetary policy adjustment again. It's a 180. Now we start to cut. All right, so that is it. Now, when we see the overall rates moving higher, let's talk about what is going to be moved based on this. And I'm going to show you the TradingView platform. And we can look at the dollar index. This should be moving higher. Dollar index should be moving higher, DX futures. Although I don't like to look at DX futures for this. Did I not log into my... Oh, there we go. I'm just making sure, because DX needs the ICE. So I usually don't recommend traders use DX futures. Of course, there's UUP. Of course, there's DXY. But what I would recommend is keeping an eye on the 6E. So bond should head lower. Dollar should head a little bit higher for a little while. Euro is going to pull back some. This is going to set up a potential long setup for us. So in the adjustment of a slightly more hawkish central bank, we'll see a little bit of dollar strength, but let's be real. The dollar has been moving lower. So we'll see a little bit of a bounce, and we'll see a little bit of a pullback on bonds. That means yields are going higher just for a little bit, and equities aren't going to like it. They are not going to like it. Now, what about gold? Because I see one of the first questions here on the morning. We're going to stick with the TradingView charts just for a bit. And what's going on with gold? I'm still in gold, gang. This has been a symbol that we've been talking about since Tuesday in the free videos at the Simpler Trading YouTube channel that I am interested in. Now, remember, this is either a 1 hour time frame view or a daily. It really is up to you all which one is visually more comfortable. It doesn't make that big a difference in terms of the zones, because Frankly, the zones on the 1 hour are going to look the same. And let me put this on this chart here. The zones on the 1 hour, and I'm going to pull up GC on toss so we can get a really great contrast of the 1 hour and the daily. The zones on the 1 hour are identical to the zones on the daily. So you might say, Ron, why look at one over the other if the zone's the same? Time frame dictates time horizons. We have a couple isms, right? Structure dictates strategy. Time frame dictates time horizon, right? We know inherently that a 5-minute time frame is a shorter time horizon, how long we could possibly be in the trade. A weekly, let's contrast to something very different. A weekly, well, what do we think about a weekly? Are we going to be in the trade longer? Of course, possibly, because each candle is 1 week of open, high, low, close. So time frame also dictates time horizon. So I could have a slightly longer time horizon on gold daily as opposed to gold 1 hour. And we can all use time frames to allow us to trade the same symbols. All of us in these 2 rooms could trade similar symbols with a different amount of attention needed. How much do you need to be glued to the screen in order to watch it? And how long might you want to be in it? So think about that when you're setting up your trades. Your time frame dictates your time horizon. So I'm still in gold, I'm still in GLD, and I'm still in GC, and we're looking for that midpoint target. So I do like gold, but not where it's at right now. It's already just above the zone. And let me show you what that zone looks like. Let's contrast where we are now from the zone that I showed you all in the videos. I'm going to put another little rectangle here on the daily time frame, and let's paint this thing green. What we were buying, right? I love color coding my stuff. I know, as if it isn't already crazy obvious. I do like to color code my stuff. And so that's where we sink into that zone. I should move that up just a smidge. That's where we want to sink into that zone and be buyers. So if we're outside of that zone, I really don't want to be a buyer anymore. So that means 1875, that area right there, 1876, that was basically the upper level. You might say, Rog, it's only at 1878 and a half. Is that far out? Well, ask yourself, does adding per full-size gold contract $250 to risk and subtracting $250 from your profit matter? I'm not saying this is an easy question. That's just a question that needs to be asked. So I hope that makes sense on gold. And I thank you, Kadar, for the question, because I love diving into these volatility levels on these longer term time frames. We're going to talk about longer term time frames a whole lot more because, gang, I felt back in June that we needed to adjust to shorter term timeframes because y'all remember what 2022 mid-year forward felt like? It felt like the spin cycle of the washing machine, or just being agitated with a very, very confusing, very, very volatile. And volatility isn't always good. Follow through is good, right? So I love when people say, well, I love volatility. No, we only like the volatility we like. Right? We like the volatility that continues to follow through. So follow through was not something we had a lot of. Remember, trades need 2 things. They need to fill. That's getting us in. They need follow through. That's what pays us. Yeah. Okay. So what we did is we focused on time frames that gave us fill and follow through. As we go into 2023, we're able to see different time frames are giving us fill and follow through. And if you checked out the free video from last night, I walked everyone through this gold setup, but my Sector Secrets Mastery folks will know, yeah, Rog, we got fill. We understand fill and follow through. That was NVIDIA. Just nicked that same level and follow through. That's all we need. That's all we need. And that is the way in which we're going to continue to operate through 2023, slowly lengthening the time frame and slowly lengthening the time horizon, slowing the market down, not necessarily relying so heavily on day trading, right? Which is a great adjustment. I love 5-minute, 1 hour daily and weekly charts. I do. I love them. But you know what I really love? The time frame that's going to give me the best follow through. So I hope that makes sense. All right. So hey there, Bobby. I think I heard you say interest rates up means dollar up, means bond values erode. So yes, if we have temporarily an adjustment on the macroeconomic measuring stick, that is, what is the Federal Reserve going to do next? right? We were just looking at this. Yes, temporarily I would look at a little bit higher interest rates in terms of the target rate probability, right? But what we're going to see is the dollar stronger, bonds moving lower, which is to say interest rates are moving higher, euro stronger, and gold will be a little wobbly too. So yeah, absolutely, absolutely. So if I misspoke, I think I got it, but yeah, let me know. But that's what I'm going to be looking at. Absolutely. All right, let's move on here. Good stuff. Thank you, Christopher. My pleasure. I always say I love queuing up the show. I love getting in the rooms. It is my pleasure and my job. I love being able to find opportunities together in this market, regardless of the time frame. And we're making those really important adjustments. Okay, let's see here. Avi, I really love you and your indicators. Thank you. How could we, but, all right, here's a but. Here we go. How can we trust double green daily when it seems we are reversing every time we get there at this, say, ES? Okay, well, let's talk about reversing. And I love the hard-hitting questions. Let's get to it, right? I don't mind it. Let's get to it. Let's take a peek. So first of all, I got to get my charts. Hey, bot, how do I get my charts to quit opening up so scrunched? It gives me a momentary headache. I'll have to figure that out. All right, ES. Let's look at tops. Let's go old school for just a moment. Let's look at the wave. All right, let's take the jargon away for a moment. What are we looking at? We're looking at the 34 EMA wave, 34 EMA on the high, the close and the low, and we're looking at grab candles, which are green, red, and blue candles. And the question is, how can we trust double green, right? The green multi-trend when it reverses every time we get there. So my friend, in all due respect, we just went double green and at 2-3, right? Avi, I love the question though, but let's make sure we're using all the tools, the 34 EMA wave and the grab candles correctly. All right, so we only went to that double green. We got this clarity on the 3rd of this month, right? Okay, but we've had green grab candles for a while, which, by the way, has the long side been the better side generally? Yeah, we could see the general path higher, yeah? So the path of least resistance is higher. When we pull back to or even towards the wave, so what does that mean? Something like, and we haven't done it since we were green, right? We're only getting to it as of really today. So remember that just because we have an uptrend doesn't mean we just keep punching up to higher highs. This ain't 2020. I wish it was. I wish life was just this eternal 2020, right? Just like I wish I was 25 forever. I wish that everything was 2020 forever. But remember, the higher highs that we were able to buy in these roaring uptrends, that's not the real world, right? The real world is what we're dealing with right now. And grab and wave decode the real world really, really well if we have the patience to wait. Today, my friend, as we start heading down towards, say, 40, 60, that's a pullback. That's not a reversal. That's a retracement. And I know it's a squiggly little line between retracement and reversal. This is a reversal south of 39.90. This is or at least a broken uptrend, right? But it's not a reversal here. This is a retracement. This is where the dip buying becomes pretty darn sexy. Okay. So Avi, I hope that makes sense, right? I trust it. Yeah, I trust it because for 35 years, wave and grab, well, not for 35 years. I had the wave first, grab came later, but I've had the wave, 34 EMA, high, low, close on my chart for as long as I've been trading pretty much. And it does work in any kind of market trend because it's not about trying to tell us where the markets are going. It's just about telling us what is the structure that we're dealing with right now. And it's still a double green, and I do want to buy the dip. All right. Okay. Next up is, does silver move with gold at all? I don't look at it that way, Prince. I will look at copper, silver, and gold. And we've been looking at silver, by the way, mostly around this 200, something we do want to set up. This is something we've been talking about in the Sector Secrets Mastery, waiting for the trigger. We're going to be using a price pattern, right? What does that mean? I'm not drawing trend lines on the chart. I'm not drawing squiggles on the chart. I am looking at open, high, low, close for an objective way of looking at when we could get a bounce near this 200. But no, not necessarily, Prince, because silver is, I kind of look at it as somewhere between copper and gold. And copper has more economic optimism when it's moving higher, more manufacturing and building type application. Gold is a play on real yields, and silver is somewhere in the middle. It's kind of like copper. It's kind of like gold. If gold and copper had a child, to be silver. And so that's where I say not really. It's going to be somewhere in the middle. It can do its own thing. So I won't say it doesn't move with it, but I don't really care. We don't need to confirm one with the other. All right. Okay. So next up, Megan asks, what's more likely for the S&P? 4,100 or 4,000? It's never, trading is, gang, listen to me now, believe me later. I'll tell you, this was hard won trading wisdom. I don't want you all to go through the battle scars and everything. You get these nasty scars and you got to get a tattoo to cover it up. We don't want to go there. Megan, we don't predict. We don't know where the markets are going to go. We just don't. So if I were to answer you that question, I mean, we're at 4,100 now, right? If I were to answer that question, it somehow suggests that I can predict where the markets are going. I don't know what the score for the Super Bowl is going to be on Sunday. I certainly don't know where the ES bottoms out. Remember, we are batters at the plate. The market's the pitcher. We know the pitcher is going to throw a ball. We just don't know where. So what is our job? And gang, please, please, please think about the difference between folks out there who with straight faces seem to be able to tell us where things are going to be tomorrow. If that's the case, give me the winning lottery numbers. I'll play those all day long, right? I don't know. Nobody does. However, what do we want to do when it gets there, Megan? And I will tell you, both your numbers are really interesting if I want to be a buyer, right? I'd like to be an aggressive level buyer closer to 40, 60. And I would be absolutely open to being a buyer at 4,000. That would be in the conservative part of this reversion to the mean that is the 34 EMA wave in a trend. So that's the way that I want to look at it. Not what is the market going to do? No one can predict, but what do I want to do if it gets there? So thank you for the levels. Thank you for the question. All right, Sergio asks, I heard the tape, reading the tape, and level 2 are something institutions do. Do I think those are things that are as important as traders say? Sergio, so the question is, do we need to learn how to tape read? And do we need to read level 2, depth of market, things like that? Depends on what you want to do. So this is where I always ask myself, because I used to, well, let's face it, I think a lot of us idolize hedge funds and big traders. Michael Burry says something and everyone wants to listen, which is fine, right? They've obviously earned that attention, maybe respect, because they've made a lot of money. But the question is, Sergio, how do they make money? So how do institutions make money? Remember, gang, institutions just don't speculate. They make money for order flow. They get paid to execute a trade. I don't know about you all, but I've never been paid to execute a trade. So we have to ask ourselves, how is it they're getting paid? And then why would that tool then possibly help them get paid more? I don't believe most traders are going to benefit from level 2 or depth of market. Reading the tape is simply a fancy old school way, which I love the saying, reading the tape. I'm a tape reader. That's just looking at the last trade that executed. I think there's value to that. We're looking at that sort of through the chart, but because you're getting a steady stream of what the last deal that was done is at, that's a very short-term approach. So now you're going to ask yourself, what time frame am I on? What time horizon do I have? I don't believe it benefits all but the most aggressive and very, very short-term traders. So it's not that it's a no for certain types. So for the kind of things that I'm going to be talking to you all about on February 23rd, yes, we did move the webinar out a week. And so I apologize for that, but it's going to give everyone a little bit more time to prepare, which I'm stoked about, and a little bit more time for us to talk about this in Charts and Coffee. If I am using a 1-hour chart or a daily, really doesn't matter. I don't need that microscopic view of what's happening with momentum. So ask yourself, do I need that? How am I getting paid? Right? And that's something I'd keep an eye on. SR says another idol. Billy, oh gosh. Yeah, if someone said you can meet a hedge fund manager, some institution person, a Billy Idol. Oh, Billy Idol wins every time. I'm with you. SR, absolutely. Billy Idol wins every time. All right. So Mixed by Five says we definitely got close to sell zones on the ES. It depends on the time frame. I love the mixed. Yeah, not just close. There it is. So if you're looking at an overbought, that's a really good look right there. Mixed, that's what a sell looks like. There's that yellow zone. The yellow zone on the DPMRs are resistance. Completely different curation of data. So a lot of people are asking me, Rog, what's the difference? Isn't it the same thing? The logic is the same, right? However, it's the difference between why those zones are there. They're both based on volatility. HPMRs and DPMRs are based on volatility, right? But why is that zone there? It's markedly different as to why a zone would be printed on an HPMR as opposed to DPMR. It's a different price zone. It's a different curation of data. So logic is similar, but the zones themselves are completely different because they're based on a different type of using, hey, what happens every day, which is a different psychology, versus what happens every hour, right? And they both have their application. All right. So we did get in the sell zone, and look at that slow stow. Ooh, that's pretty. That's really pretty. Good eye. All right. Next up, I've had a lot of coffee today, by the way. Can you tell? I've had a lot. Woke up super tired. I thought, let's have some legally addictive stimulants. All right. Next up, how are we doing on time? I am running over too. See what happens when I get caffeinated? All right. Last question. And then my sector secrets, folks. I'll be with you in a moment. All right, Zane, how to pick which trend is dominant when the SPX is green, but the ES is yellow. Look at the ES. Yeah, look at the ES. And then decide if you want to trade MES or SPX or SPY, right? Look at ES, and you can see we've got the zones on the SPX as well, both for hourly and for the daily. Yeah, so there you go. That's definitely what we want to do. So look at ES, find the zone there. Be careful because the ES, remember, the ES has been moving nearly 24 hours. Okay. All right. I'm out of time, gang. I will see you all Sunday evening, 6 p.m. What time does the Super Bowl start? I can't remember. I'll see you 6 p.m. for our Raghee report. We'll talk a lot more about what we're seeing in the upcoming week as far as clarity. Be good to each other. I'll see you then.